Yeah. Let me know.
You're live.
Good morning from just outside Washington, D.C., but afternoon, evening, depending upon where you are in this world. Welcome to our first meeting of 2022. It's a easy one to follow because we only have one agenda item today. It's our annual engagement with the IAASB, and we're thrilled to have IAASB and IFRS Foundation colleagues here to brief us. All participants have received our slides for the video conference today, and they'll be used throughout the discussion, but I don't think we're going to go through every one of those slides in detail, but be prepared to engage on the slides and after the team's presentation. Just as always, notice of this meeting has been made available to the public, and the slides for the agenda items are available on our website after this call. It's also one of my pleasures to invite our new board members and TAs who are attending the IAASB's video conference in their official capacity for the first time. Bill Edge, who's chair of the Australian IAASB and is joined by his TA, longtime TA at this board, Renee Herman. Warren Maroon, who's coming from South Africa. Warren's a professor, now Vili, I'm going to try as professor at WITS at Goethe University. I cannot pronounce the full name, so I'll stick with the abbreviated one. And he is joined by a new TA to our board, Yvette Lang, and Diane Hardesty, who joins the team Diane. Diane Larson, and joining our first call. I'd like to also welcome a new member of the staff, and this will challenge me too, Adriana Kier-Kush. Is that close, Adriana?
It's correct.
Yes, well done. So she's our new staff fellow, joining us from PwC in Romania, where she's an audit director. She'll be working with us on sustainability, ISA 600 implementation guidance, and various other topics in our time with the IAASB. So some of you may have met Adriana already in some of our working group meetings, but please extend a warm welcome to her. And then finally, and probably most importantly, a really warm welcome to our friends and colleagues from the IFRS Foundation and IAASB, Henry Rees, Rika Suzuki, and last but not least, Mary Tokar. I just wanted to say something about Mary, because this is probably Mary's last update in her capacity as a full-time IAASB member as her term comes to an end at this year. But Mary, I think on behalf of our board, but particularly me personally, thank you for your service to the world of external reporting over, I won't talk about the years, but you were my tutor. I think I've said this before, in the world of standard setting 20 plus years ago, when I started out, and I pretty much learned everything from you at scratch. But huge thanks for your service to the public interest, and we really look forward to hearing your presentation today. Finally, I wanted to welcome the official public observers who are joining this call, and the public observers that are following us on YouTube. So I think for the PIB, we have Michael Haithman, and our official observers, Jim Dowkin, our CAG chair, and Yosh Matsumoto from the Japan FSA. Thank you all for being with us today. One of our strategic objectives talks about interaction with other official bodies. I can't think of one of the more important bodies to interact with the IAASB, because together we form a strong alliance in defending investor and other interests in external reporting. So I'm going to turn it over to Mary right now, and look forward to your presentation today, and look forward to the engagement over the next hour and a half. Mary? I think you may be on mute, Mary or Rika.
No, Tom was just saying thanks very much for your welcome, both institutionally and personally. Thank you for those kind words. And I'll kill you if you ever start enumerating the number of years, because that's really bad data to have out in public. Echoing your thought about the importance of the relationship, I wanted to start with thanks to the IAASB, both the board and staff, because you've made major contributions in the course of a very busy time to a number of our consultations, and I'll come back to that in a minute. But that just is a great manifestation of that connectivity that you were referring to. So thank you very much, and thanks for making time for us today. As you said, we sent a longer deck than we planned to go through. Our objective is to cover most of the materials through about slide 37, and then we put in as an appendix slides about other projects, so that if people have questions, it gives us an easier basis for answering questions. And speaking of questions, I think that we would like to take them as we go along. So we will pause and ask specifically at a few points. But if Bev, I'm not sure if you or Michelle is best placed to see who's raising their hand or has questions. Just give us a shout, because I think probably best to deal with it on a timely basis. So Michelle, if we go to slide 3, and we're going to show the official photographs, well, I just do a quick introduction. And now, Henry, I'm about to violate the rule of no specificity about years, because I was trying to remember whether it was perhaps 2002 that you started your 18 to 24 month secondment to the IAASB, and technical staff, and in the years that you've been with the foundation, you're senior technical staff on a number of our major projects, including leading on revenue, on the interpretation committee, and supporting consistent application more broadly, as well as latterly insurance. And Henry recently took over a role as head of governance and trustees at the foundation. Rika Suzuki joined the IASB in July of 2019 from PwC Japan, where she was the leader for their IFRS accounting standards and implementation support, also a member of the ASBJ and a number of other related committees. And as Tom said, I'm coming up to my sell-by date, because I joined in January of 2013. I had a background as an auditor at KPMG with KPMG's global IFRS group, as well as a number of years working as a regulator. So those are the backgrounds and perspectives that we bring from the IASB side. Now, Michelle, if we move to slide 5, we thought we'd start out by just looking at what new IFRS accounting standard requirements are coming in the next couple of years. Insurance, of course, gets a star, but actually, I put a star on it to signal that it's really the only chunky, that's a very technical term, major new standard coming into effect in, across the 22, 23, 24 time period. And it is pretty industry specific. And so we were not planning to spend a lot of time talking about overviews of requirements of finalized coming into effect new standards. And instead, we were going to focus on work in progress, but certainly we'd be happy to try and take questions, maybe save them to the end. We have, I think, slides in the appendix on all of these projects, if people have questions about any of them. So if we move now to slide 6, you'll see an overview of what either just closed at the end of January or still is open for consultation. And again, generally more of a narrow focus for each of these rather than broad projects that cut across a number of topics, companies, and financial statement aspects, except maybe subsidiaries without public accountability. And just to give you a heads up about what that's about, really, we're proposing a slimmed down disclosure regime for subsidiaries that would qualify for using the SME standard, the IFRS for SME that we have. And the idea is to allow subsidiaries that have to use, or that IFRS standards, IFRS accounting standards, for purposes of group reporting, to use that one set of recognition and measurement requirements, and then have the more limited specific disclosure requirements based on the IFRS for SMEs, given that as a subsidiary that does not have public accountability, their user base is somewhat different. So that's kind of, wanted to highlight that because it's a way we are trying to address cost benefit of requirements and supporting application of IFRS accounting standards. But now if we move to what's up, if you look at slide 7, this goes back in time slightly and looks not only at things that currently are out for comment, but items where the comment period, for which the comment period closed in 2021. And the reason I'm going historical on you here is I think this slide does better than a lot of words at showing what a heavy consultation period we've just been through. And, speaking selfishly, yes, that's a lot of work for us, both in terms of preparing the documents and then conducting the outreach, which is a mix of education and listening and field work and presentations. But it's also been a very heavy ask across our stakeholder base. And, when I look at the IAASB, we've had very helpful comment letters from you guys in response to our primary financial statement project, our business combinations and goodwill, our agenda consultation, and our rate regulated activities exposure draft, as well as IFAC commenting, as a whole on our management commentary document. So we know that it's been a period with a lot of demands placed on our stakeholders. And now the pendulum is swinging back. As you look at slide 8, what you see is that the IAASB is facing a major period of redeliberations. So synthesizing and digesting the feedback that we got across our stakeholder base, across all those projects. And I think when you look at this, you see PFS, certainly we are trying to move from an exposure draft to a final new standard. Same thing with rate regulated activities. I think we're earlier days on the lease liability and sale leaseback, which is a narrower scope amendment in terms of way forward. We are getting ready to publish our exposure draft for the IFRS for SMEs. Haven't completed the redeliberation of the feedback from the discussion paper, but I'll come back to that a couple of comments on that project later on. We have been discussing the feedback and trying to decide project direction on goodwill and impairment. Rika's going to give you a bit more background on that. And then for some of the other consultations, the next step is a feedback, either a feedback statement, the PIRs of 10, 11, 12, and then for projects where the comment period, for which the comment period is closed relatively recently, we're looking ahead, we're looking forward to having the feedback summaries provided to the board and discussion of what's our next step. So if you've been looking at board papers, you will have seen huge amounts of data coming back to us and us starting to work through and agree project plans for each of these projects for which we did a consultation in the 2020 through 2022 period. Now, in terms of today's update, what we're thinking is that we would, we can pause if anybody has any specific questions on agenda. Then next up, Henry was going to give a bit of background on IAASB, and we could talk a bit about our recent agenda consultation, which we are still deliberating as a board. So Bev, Michelle, I'm not sure if anybody has hands raised for questions.
Anyone want to intervene at this point? Just use the raise hands button. I see none, Mary. So I suggest we proceed. Is it to Henry now?
It is indeed to Henry.
Thank you, Tom. Thank you, Mary. Hello, everybody. I hope I can be heard. So if we could move on to slide 11, I think it is, Michelle. Thank you very much. So as Mary said, I wanted to provide a sort of brief update on the new standard setting board that now is in the IFRS Foundation, the International Sustainability Standards Board, or the IAASB. We have to watch these acronyms. So this board was, I'm sure you may well have seen the announcement, but was announced by the chair of our trustees at the COP26 United Nations Climate Conference last November. And that announcement really marked the culmination of a lot of work that had been going on over the previous months by the trustees, really to assess what role the foundation, the IFRS Foundation, should be playing to meet the sort of the increasing demands that there are in the capital markets for global sustainability standards. And the trustees' work included undergoing 2 consultations. The first was in late 2020, and then the next one was sort of April of last year. So the IAASB's remit is to develop a global baseline of sustainability disclosure standards. And these standards are intended and will be designed so that companies can provide comprehensive information about ESG matters to the global financial markets. And we very much see the new board's work and its standards very much as a logical extension of the foundation's mission. The foundation has always been focused on serving the capital markets, on providing useful information to investors. But clearly, investors' needs have been evolving since the foundation in its current format was established back in sort of 2000. So we need to evolve to meet these needs of investors. Now, the idea behind that global baseline of standards I mentioned there is for the standards to be developed by the IAASB so that they can facilitate compatibility with other requirements. So those requirements could be jurisdiction-specific additional requirements, or also requirements that go beyond just meeting the needs of investors and actually are providing information to a broader group of stakeholders. So they're designed to be sort of facilitate a compatibility and interoperability with these other requirements in the marketplace. So if we move on now to slide 12, and this slide, actually, sorry, could we go back to slide 11? Sorry, I skipped too quickly there. Just wanted to highlight that as well as announcing the new board last year, there were 2 other important announcements at the same time. So first of all, the trustees announced their commitment to consolidate the Climate Disclosure Standards Board and the Value Reporting Foundation into the foundation, so reducing some of the fragmentation there has been in the marketplace in the sustainability space, and also to ensure and to signal clearly that the IAASB is not starting with a blank piece of paper here. It is building on a lot of the very extensive work that's been done in recent years by other organizations. And actually, I could just report that the consolidation with CDSB was actually completed. I think it was just last week. And the trustees now are focused on completing the consolidation with the Value Reporting Foundation mid this year. And of course, the Value Reporting Foundation itself was a recent merger of the IAASB and the International Integrated Reporting Council. The third element was that 2 prototypes were published back in November as well. And these really signal to the marketplace the sort of the direction of travel for the IAASB's work. So one of the prototypes, it focuses on climate related disclosures and very much builds on the TCFD's work. And the other prototype sets out general sustainability disclosures and to some degree is modeled on IS1 in the IFRS accounting standards. Now, these prototypes are in the form, if you like, of recommendations to the new board, the IAASB, from a group that the trustees had set up earlier last year. It was called the Technical Readiness Working Group, and it was a group formed from existing initiatives, and it included also a couple of ISB board members too. And they worked very intensely over 6 months to sort of build on existing work. And the idea really behind this group was to provide the new board with a running start to help the new board, when it gets operational, really get cracking with its work, just given the urgency that there is in the marketplace for some initial standards. The other piece just to mention is that the IAASB is going to have a sort of global multi-location presence. So far, you may well have seen that it's been announced that the seat of the board and the office of its chair will be based in Frankfurt. There's also going to be important offices in Montreal, as well as San Francisco. San Francisco comes following the consolidation of the Value Reporting Foundation, and work and discussions continue on proposals for offices from Beijing and Tokyo, just to sort of build the global footprint in the Asia-Oceania region. So there will be some more announcements coming soon. And then last but not least, just in terms of the people around the board, just to highlight that in December, the inaugural chair who's going to lead this new board, Emmanuel Faber, was announced by the trustees. He's from France. He was the chair of the board and the CEO of Danone, where he was very much a champion of the importance of sustainability information to the capital markets. And then just a couple of weeks ago, the trustees announced that Sue Lloyd, who's the current ISB vice chair, will be leaving the ISB at the end of this month and will become vice chair of the new board. Sue had played a huge part in the technical readiness working group work last year, and also announced a special advisor, so Janine Gillot, who's the CEO of the Value Reporting Foundation, joining as a special advisor to the chair of the board, and also there'll be a special advisor for emerging markets. So the focus now in terms of the people is just getting the board operational as soon as possible, and there's the search for board members was launched early in January. Because, as I say, there's this need to get the board operational as soon as possible and move on with its urgent work plan. So very quickly, looking at slide 12, if we could just move on to the next slide. This really just illustrates how the new board fits into the existing foundation structure, the 3-tier structure that we have. And you can see here that the IAASB sits alongside, very much on an equal footing, with the existing IAASB. And very much this new board is modeled on the basic provisions in the constitution for the ISB. So it's going to be the same size board of 14 board members. The majority will be full-time board members too. And of course, the work of the new board, as the work of the ISB is, will be overseen by the foundation trustees. And the two boards are independent, but they will be working collaboratively. And I'll just sort of say a few more words about that in a moment. And you can also see that the IFRS Advisory Council, which has historically provided advice to the trustees and the IASB, its remit will be broadened and its membership looked at so that it's providing advice to the new board. And there will also be, just as the IASB has various consultative groups, the new board will have various consultative groups and advisory bodies too. So then just looking a little bit more on slide 13, about the two boards. And as I said, you know, the idea is the two boards, although independent, will work collaboratively. So going forward, we have the International Accounting Standards Board, and it will be setting what will now be called IFRS accounting standards. And we have the IAASB that will be setting IFRS sustainability disclosure standards. And a key part of the strategy, and that was very much enshrined in our revised constitution and was very much what our stakeholders were calling for, is that the two boards really work collaboratively together to ensure there is, the buzzword is connectivity and compatibility between the two boards' standards. We just want them to be compatible and work together. So the vision is that the standards will complement each other and be providing a sort of a holistic set of information to investors that meets their needs on particular topics. So I think the way it should be working is that the two boards should be really looking at what information the market needs in a particular area, and then work out whether that is information to be provided in the financial statements or whether it's broader sustainability information that will be provided by the new board. So it's going to be interesting to see how this develops as the IAASB becomes operational. So I think I'll just stop there on the IAASB. I think that hopefully brings you up to date where we are. The current focus, as I said, is on now building the board members and getting the board operational, implementing the multi-location model and establishing the various advisory groups. So there's a lot of work yet still to be done, but we're onto it. So thank you very much.
Henry, I thought I'd just jump in with one further observation, and I think slide 13 sets it up well. And please correct me if I misspeak. But when you look at slide 13 and you see, as you said, the objective representative financial statements complementing the sustainability disclosures and vice versa, so that they work together. I think we have said, though, that we do not plan to require that IAASB sustainability standards be used in order for somebody to say financial statements have been prepared using IFRS accounting standards. And the inverse also is true, that the IAASB sustainability disclosures, I think at least my personal expectation is that they would not require IFRS accounting standard financial statements in order to implement the sustainability disclosure regime. Is that correct?
Mary,
correct
thank you.
Statements both ways?
Thank you very much for making that point. It is an important point, and that is right. So although they're designed to be compatible, they will also work, if you like, in that separate way that you've described there too.
So Tom, before we hand over to Rika to talk about the IAASB agenda consultation, do you want to see if anybody has questions, comments for Henry?
Yes, I'll do that. Sorry, but I had a momentary computer glitch. So I've joined you from another computer. So any comments on this? Obviously, the sustainability area is one we're following very closely, and we've launched our own work stream on enhancing existing sustainability assurance requirements. So anyone on our board like to comment? Diane?
Hi there. Thanks, Tom, and thanks everybody. And I apologize if this is an obvious question or there's an obvious answer to my question. When I look at the IFRS Sustainability Disclosure Standards box, which strikes me as the word disclosure. And so to me, I just want to make sure I'm looking at that correctly, that group is really just addressing, it's a narrower focus. It's addressing the disclosures. Because when I think about risk, and accounting for the risk associated or accounting for the potential exposures related to climate change or some of those matters, I suspect that would send you back to the IFRS accounting standards. So I just want to make sure that there's real purpose to disclosure within that second red box.
Why don't we gather a couple of interventions and then allow the team to respond? Lynn?
Thank you, Tom, and thank you very much for the presentation. That was very interesting. I'm interested in the prototypes and exactly what your time frame is for those prototypes, and when we can expect something to be in the market. I'm also interested in any comments you've heard or things about what kind of assurance people are looking for in terms of sustainability. Thank you.
Thank you, Lynn. Josephine.
Let's also echo the thanks. Very, very interesting and very grateful for the presentation as well. It's an observation and maybe slightly too early for you to comment, but I was thinking about that interaction between IAASB and ISSB, noting Henry's caution on the abbreviations there. I was wondering how the work of the IAASB on the management commentary will then interact with the work of the ISSB. And again, maybe it's too early for you to make any observations about that, but there does seem to be some overlap, of course, and I was just wondering if that had been thought through at this stage. Thank you.
Henry, we have two more hands up, but would you like to hear them, or would you like to respond? Or
we can start responding.
Okay, and then I see Warren and Len will come in afterwards.
Yes, maybe if I just start with just picking up some of the question here about the prototype first of all and the time frame. So the prototypes, as I said, were designed to provide a set of recommendations to the IAASB. Now, one of the things that the trustees have put in as almost like as a special provision into the Constitution is to allow the chair and the vice chair, it's to give them the option, the flexibility, if you like, that if they think that work is sufficiently mature, to launch the exposure drafts in advance of there being a full board in operation. So potentially exposure drafts could be issued based on the work that the TRWG has done to launch public consultations in Q2 of this year, potentially. I mean, that's still to be decided. And then, there will be the normal consultation on that work. And then the IAASB, and it will have to be the IAASB as a board, will consider the feedback on those consultations and work to finalize those standards. So it's hard to be definitive about the timescales. We are aware that people like IOSCO do see an urgent need for these standards and are calling for climate standard really to be issued in this year. But we'll have to see how the timeline develops. So that's where we are with that. I think just in terms of the assurance, I think it's just in terms of the one of the important aspects around here is that one of the things that people are really looking for is that IAASB standards, it's going to be eventually similar to how it is with the accounting standards, so that essentially you have enforcement and you have an assurance in the way that you do for the accounting standards. So there will be that demand in the marketplace there. Coming back to the interactions, and I think Mary will want to provide some color here as well, because this is very relevant on the risk and the overlaps. I think Josephine, you identified the management commentary project, and I think that is a sort of like a real poster child for where we can expect the two boards to be working together. And so some thought has been given to that, but effectively that will be a classic example of where we could expect there to be close collaboration between the two boards. But Mary, perhaps I could pass over to you, if that's all right, if you would like to say a few words about that, and also perhaps on the point about the risk disclosures as well.
Sure, and then I'm going to try and comment without detracting from the comments Rika's going to make about the agenda consultation. And also something Henry's teed up to just comment on about educational material. Diane, I think your observation about the focus on disclosures in the name is an interesting one. And there is kind of always a question about to what extent do existing requirements and IFRS accounting standards apply in terms of the risk management around, for example, climate. And this is something that the board has looked at, not as a board, but individual members commenting. If you look, and Henry, I apologize for this, it's front running, but I think it's maybe the right time to pull it up. If we flip to slide 37, you'll see, several years ago, Nick Anderson authored a piece on climate-related risks. There was a follow-up that the staff did, and it's highlighted here, in terms of thinking about today's financial statements and applying existing requirements to risks that relate to climate and consistency, let's say assumptions, in terms of depreciable lives, in terms of impairment calculations, et cetera. And this issue of especially climate risk is one that was raised in some of our input to the agenda consultation. So I think it's something you see in the feedback, and that the board will be discussing whether or not we're going to do anything more on that as the IAASB makes its decisions coming out of the agenda consultation. And in terms of management commentary, I liked Henry's language about poster child, because I think that's a great description. Personal view, I can see there being quite a range of activity between the two boards as we each evolve. I think management commentary, as I look across current and potential future projects, may be the one that has the greatest likelihood of perhaps even being a joint product. But then there are others where we might be providing the recognition and measurement requirements in an area that would be complemented by disclosure requirements built on related to those recognition and measurement. If we move away from climate for a moment, and you think about some of the calls for human capital management, there are both recognition and measurement issues, and then disclosures about expenses that I think fit within financial statements that would be seen as a mini version of that puzzle piece connecting the two boards that you see on Henry's slide 13. And I think the IAASB is conscious of that, and maybe pausing a bit on management commentary until we can get a bit more clarity about how best to move this forward in a way that responds to both current stakeholder needs and also doesn't get too far in front of the IAASB. So that's maybe pause slightly. Henry, is there anything else that you think it might be useful for me to contribute, or should we kick back to the other questions?
Mary, I think we probably should see if there are any other questions and then perhaps move on, just conscious of the time as well.
So we have two more questions out there. Warren?
Thanks very much, and apologies if the question is a bit premature, but just following on that point about the management commentary as the poster child, do the two boards envisage that we'll be working with the type of conceptual framework, laying out a set of broad principles that will then be guiding how these sustainability disclosure standards will look, the type of issues that they'll be addressing, in addition to matters relating to climate risk and climate change? That was the first part. And then the second closely related part, building on what Diane said about, talking about the distinction between accounting and the disclosure. To what extent do you think we'll be seeing recommended disclosures that are fairly objective, based on sort of best practices, what we've seen emerging over the last 20 years? And to what extent do you think we'll be seeing more sort of principles-based disclosure requirements where companies will have a lot more scope to decide exactly what and how they go about articulating different ideas, like, for example, human capital management?
And Len?
Thank you. Thank you, Henry and Mary, for the introduction. So my question is about looking at the future in terms of global adoptions and hopefully convergence as well. When the old IASB was established, there were mature accounting standard setters nationally. But if you look at countries around the world, maybe there are less mature national standard setter for sustainability reporting. Rather, most of the work had done by international organizations such as IAASB. Just wondering whether at this point in time, whether how the new board plan to engaging, or in the current situation where nationally, jurisdictionally, there hasn't been a standard setter to work with the IAASB. In terms of planning and rolling out the new standards and getting input and implementation. So the very forward-looking question. Thank you very much.
All right, those are the final two questions, and then after that, that's your response. I think suggest we continue moving on.
Henry, do you want me to start with maybe the geekier aspects relating to standard setting, and I'll leave Len's kind of more conceptual infrastructure challenge to you? Is that okay? Okay.
Thank you, Mary.
I just, again, I keep saying this, and it's true about all of our comments, but I'm emphasizing that I'm giving personal views and to some extent speculation, because we're talking about a board that now has a chair and vice chair identified. The chair has started, the vice chair is, within the foundation, but not supposed to start until March, and the rest of the board members haven't been named. In terms of same conceptual framework, I can't remember whether there's anything in the prototypes or not about specifically a conceptual framework, but I think it is important, if we go back to slide 13 and look at that gray box at the far right, about how both boards have a focus on investors and other capital market participants, rather than having a different definition of the stakeholders for the IAASB. And everything really flows from your definition of who are you trying to serve, and how is this information expected to be used? And Warren, in terms of your question about the accounting, the disclosure requirements, will they be fairly objective or more principle-based? I can't answer for the IAASB, but I do want to flag that we just closed our consultation period on the Disclosure Initiative Targeted Standards Level Review, which put out to the world a question of, should we be trying to write more typically disclosure objectives with lists of items as illustrations but not requirements? So more what you described as a very principles-based approach to disclosure. The comment period just closed, in the last 10 days or so. We've not had any feedback, and an overview of the feedback in total, but I'd imagine that what feedback we get from that project could be useful input to the IAASB as they think about how they write the requirements in their standards, as well as considering, for example, the prototypes. So, Henry, that's my narrow view from an IAASB perspective. I think you can probably add some bigger picture context.
Well, thank you, Mary. I suppose just thinking about a few things to highlight that actually, in terms of the conceptual framework, I think it's probably just worth me highlighting, and I'm sorry, not that familiar with the work, but the Technical Readiness Working Group did have one of its work streams was developing some recommendations with respect to conceptual guidelines. And I think they were recommending that in time, the IAASB, should have a conceptual framework playing a similar role to the IASB's conceptual framework. And of course, that importance of consistency of concepts would really help ensure that sense of the consistency between the two sets of accounting standards. If you are interested in that work, just to highlight that if you go onto our website, there is actually a section that just has a summary of the work of the Technical Readiness Working Group that's been provided to the new board. So if you want to dig into any of this, it's all available on the website. Then just thinking about some of the questions here about the sort of the linkages with jurisdiction and the like. I mentioned very briefly earlier on, I think, that the IAASB will have various advisory groups, and I think two of them are probably just worth highlighting at this stage. Just one is that there will be this sustainability consultative committee that will have bodies such as the multilaterals like the IMF, the OECD, the UN, and the World Bank to provide advice to the IAASB. And also there will be a group I think it was called the Sustainability Standards Advisory Forum. But the idea of that group is it will be made up of jurisdictional representatives, including from the emerging and the developing markets, and that will provide a very strong link between the IAASB in terms of creating the engagement with between the IAASB's work and the jurisdictions, and also help facilitate that sort of interoperability that I mentioned in terms of the IASB's the nature of its standards earlier on. So there's some important consultative groups being here to create that sort of broader infrastructure around the IAASB.
Okay, thank you, Henry. I don't see any more hands up for this topic, and conscious of time, we have about 40 minutes to go.
So let me explain about the agenda consultation. Our third agenda consultation. Henry's presentation gives us the good background about the what happened, our sister board IAASB side, and then now we need to look into further about our own work plan for the future. So first of all, thank you very much for IAASB members for your thoughtful comment letter. We appreciate your feedback to our request for information of our third agenda consultation. And as many of you are aware, the IAASB undertakes a public consultation on its activities and its work plan every 5 years. I'm sorry, slide 15. Please look at, thank you, I'm sorry. So, we undertake our agenda consultation to every 5 years. And then in March 2021, the IAASB published a request for information, third agenda consultation. The deadline for submitting comment letters was 27 September 2021. So in our November 2021 meeting, the IAASB started to discuss the feedback from respondents. Responses to this request for information will help the IAASB to determine how to prioritize its activities and what new projects to add to its work plan for 2022 to 2026. In the third quarter of this year, we expect to publish a feedback statement summarizing those responses and setting out our activities and work plan for the next 5 years. The objective of this agenda consultation is to gather views on the strategic direction and balance of the IAASB's activities, the criteria for assessing the priority of financial reporting issues that could be added to the work plan, and new financial reporting issues that could be given priority in the IAASB's work plan. Please move on to the next slide. Let me talk about the feedback overview. First, the table on this slide shows the IAASB's main activities and comparison of the current level of focus and the level of focus suggested by feedback we received. Most respondents commented on the strategic direction and balance of the IAASB's activities, and they supported the IAASB's current strategic direction. Many said that current allocation of resources to the IAASB's 6 main activities is about right and probably adequate. But some suggested minor modification to the level of focus on some of the activities. Many respondents emphasized the increasing importance of sustainability. Of those respondents, almost all commented on potential interaction and connectivity with the IAASB and the IAASB. Many of these respondents said boards should set aside capacity to support that interaction and connectivity. At the same time, they said it should not affect the IAASB's capacity to deliver timely. So some respondents, mainly national standard setters, said partnering with stakeholders from the broad IFRS community could alleviate some of the IAASB's capacity constraints. Additionally, many respondents said IAASB should be flexible to change in financial reporting priorities and should set aside capacity to respond to emerging issues in a timely manner. Nonetheless, this means this required reprioritize some of the IAASB's activities in the future. This point is also raised by your comment letter. Please move on to the next slide. This slide includes the IAASB's proposed 7 criteria for assessing the priority of financial reporting issues. most respondents provided feedback on this aspect of the agenda consultation. Almost all agreed with the criteria proposed by the IASB. Many said the criteria are well balanced and adequate. Some respondents suggested the IASB should consider additional criteria in deciding whether to add a potential project to its work plan. The idea of applying the proposed criteria is to use those points as a tool of overarching consideration consistently across all potential projects. So we tentatively decided not to make any changes to the list of criteria, but to proceed with the list as proposed. Next slide, please. Now it's about feedback on priority of financial reporting issues that could be added to the IASB's work plan. Some stakeholders said the IASB should be realistic about adding new projects to its work plan, given the status of current work plan, its resource constraint, and the resource constraint of our stakeholders, the need to retain capacity to responding to emerging or urgent issues and interaction and connectivity with IAASB. This comment is also mentioned in your comment letter as well. So because a request for information of agenda consultation is not a popularity contest, so only the popularity of the project among our stakeholders will not conclude as that popular project should be within the part of our future work plan. But IASB, we will consider its own experience and expertise in determining its priorities together with feedback. And then most respondents rated potential project on climate-related risks, cryptocurrencies, and related transactions, and intangible assets as high priority. Many respondents rated potential project as going concern, pollutant pricing mechanism, and state of cash flows and related matters as high priority. The number of new projects that the IASB can add to the work plan is constrained. Still, we might be able to work two or more related projects together at the same time. For example, intangible assets and cryptocurrencies. Lastly, the IASB should work on some projects like climate-related risk and pollutant pricing mechanism together with the IASB. That was already mentioned in Henry's slide, and we already discussed a little bit in the Q&A session. We have not yet decided anything, but we will discuss further on which project and to what extent of collaboration and connectivity with IAASB is necessary. So with that, I pause my presentation here. And Tom, have you received any questions or comment?
Thank you, Rika. Josephine.
Yes, thank you ever so much. I just wanted to show my support for Going Concern. I'm actually the chair on the IAASB's Going Concern project, and we'll be presenting a project proposal in March. And of course, as you probably gathered from our response letter, this was the most significant of comments that were received from respondents to our own consultation as they continued to urge IAASB to consider clarifications, changes and enhancements to the IAASB standards, as well as our own standards in this regard. So when we launch our project proposal, if the board approves it, fingers crossed, in March, we'll certainly be looking to work with the IAASB in terms of some of the considerations we have, perhaps doing a deeper dive in some of the respondents' comments where there is an overlap on the accounting standards side, and working together in how we might improve both the audit and accounting in this area. So great support to see Going Concern there as one of the most commonly suggested projects. Thank you.
Thank you.
Thank
Josephine.
you. That was the only hand I see.
Tom, I'm going to throw in a comment of my own, if I may. And without going back to them, I just want to highlight the kind of the interaction of slides 6, 7, and 8 with the agenda consultation. And 6, 7, and 8 were the ones that looked at the IASB's current work program. Somebody made the comment in passing to me recently, I can't remember what the context was, that although this agenda consultation is titled 2022 to 2026, it's probably more like 2024 to 2026, because one of the things we said in the agenda consultation is that we are not throwing up our, putting our current work plan into the mix of should we deprioritize. I think Rika touched on that. And if you look at slides 6, 7, and 8, you can see that there's already a pretty full load that's consuming, as Rika said, not just the board's capacity, but also our stakeholder capacity at this time. So when Rika talks about adding 2 or maybe 3 projects to our agenda, we are talking about adding them at the back end rather than suspending activity on current programs to jam in something that comes out of the agenda consultation. And I say that I think that's an important message to start getting expectations set across stakeholders, because it is I expect it's going to be a while before we see anything but kind of some of the smaller cleanup things that can be fit into maybe some of the gaps coming onto our agenda. So that's, I think, one of the balancing acts that we're going to be facing as the board when we make these decisions. And, again, calling on my experience as former auditor and former regulator, if you're going to have to deliver a disappointment, sometimes it's better to be clear and upfront and take the hit rather than stringing people out in the hopes, that maybe if all the stars align kind of thing. But we'll see how well I get on with my negative message of make hard decisions now, which I've been saying at the board table for a while. So anyway, Rika has the unenviable task of also walking us through some of the current projects that we thought you might be most interested in, just a snapshot of where we are right now. And I should, if it's okay, Tom, turn back to her.
Okay, let me explain about primary financial statement project. In this part of the presentation, I will provide you with an update on the deliberations on the proposals in the exposure draft, presentation and disclosures, general presentation and disclosures published in December 29. So please move on to slide 20. As a recap, starting with this slide, the objective of the project is to improve communication in financial statement with a focus on the statement of profit or loss. The main proposals relate to subtotals and categories in the statement of profit or loss, principles of aggregation and disaggregation, and disclosure requirements of management performance measures, MPMs. The IASB is making good progress in the deliberation. So let's move on to the next slide. So this slide explains that how we facilitate the IASB's deliberation. We focus on the 4 key factors. First, we consider the objective of this project directly responds to user demand to focus on reporting of financial performance. So we prioritize working area that fit directly within the focus of the project objective. So that information is presented in the statement of profit or loss. Second, there are many linkages between different topics in the project. So the IASB consider the linkage is important because decisions on one topic may affect the approach to another topics. And then third, completing the project on timely basis is quite important. This is a project that users of financial statement want implemented as soon as possible. Fourth, and lastly, efficiency. Efficient use of resource and time is important. Considering efficiency, we consider it appropriate to prioritize work on areas where the ISP should focus and spend more time by applying a stage approach, which is described in the next slide. So please move on to slide 22. So considering all 4 key factors on the previous slide, we decided to adopt a stage approach to topic which the ISP received mixed feedback. And so first, we identify the topics listed as priorities topics in the left box on this slide. And they are in the project focus area and were well received by most stakeholders. And based on such feedback, we consider we can proceed with those topics efficiently without making any significant changes. Second, and then we move on to targeted topics, such as more specific items in another box. So in contrast, we received mixed feedback on those listed items in the right box. Thus, we deliberate overall direction of each item first, and then assess and consider detailed requirements, which enables us to efficiently respond to feedback received. And then thank you very much for your comment letter. And your comment letter provided feedback to the ED on the definition of MPMs, the separation of integral and non-integral associate and joint ventures, definition of unusual items and expenses, and also separating items in investing categories from those in operating categories. We have not yet concluded the things about the latter two, about definition of unusual income expenses and separating items in investing categories from those in operating category. So I will focus on the definition of MPMs. So about the separation of integral and non-integral associate and joint venture, we have already decided we drop to require the entity to separate integral and non-integral associate and joint venture. So let's move on to the next slide to explain about our progress in MPM's deliberation. So this is kind of the specific topic in the scope of staged approach. In the first stage, the ISP has confirmed that an entity will be required to disclose information about MPMs in the financial statement. But in order to maintain focus on the project objective, the board also tentatively decided to not explore expanding the scope of MPMs beyond subtotals of income and expense. Then in the second stage, we are diving into more specific topics in light of MPMs. So we already tentatively decided on, for example, to clarify the objective and definition of MPMs. So we tentatively decided to retain providing management view of an aspect of an entity's financial performance as the objective of management performance measures. And also, given the general requirement for faithful representation, given the general requirement for faithful representation exists, we tentatively decided that there is no need to repeat that requirement in the specific requirement of these standards for management performance measures. Instead, we tentatively decide to provide application guidance referring to how to apply the general requirement for faithful representation in the context of MPMs. And we also tentatively decided to narrow the scope of public communications considered for the purpose of applying the definition of MPMs by excluding oral communications, transcripts, and social media posts, I think this can achieve operational application of the definition of MPMs as well as the meaning of public communications. Let's move on to the goodwill impairment project on slide 24. This project has been on the IASB's agenda since 2015, and so many school stakeholders, including you, will be familiar with this project. The project is a response to the post-implementation review of IFRS 3 business combinations. The overall objective of the project is to explore whether companies can, at a reasonable cost, provide investors with more useful information about the acquisitions those companies made. We published a discussion paper in 2020, which includes a preliminary thought of IASB on how to meet that project objective. The IASB's consideration how to meet the objective is three ways. First, improving the disclosures in IFRS 3 so that companies are required to provide better information about subsequent performance of acquired business, as well as the company's information about the business combination. Second, looking at the subsequent accounting for goodwill, including whether we can improve or simplify the impairment test of CGU containing goodwill, and whether we should reintroduce amortization of goodwill. Lastly, considering other topics such as recognition of intangible assets acquired in the business combination. Since the comment period on the discussion paper ended on the 31st December 2020, we have been discussing feedback and started to make some decisions about the direction of the project. These are discussed in the next slide, so please move on to the next slide, 25. The first decision the IASB made was in June 2021, when the IASB decided, after considering feedback, not to change the objective or scope of the project at the current stage. The IASB continued to view all different topics of accounting and disclosures in this project as one package, together meeting the objective of the project rather than as individual piece of topics. In September 2021, the IASB agreed on a project plan to prioritize decision-making on two areas of the project. One, the disclosure about business combination, and whether to retain the impairment-only model or reintroduce amortization of goodwill. I'll go through each of these, highlighting some considerations that are relevant to auditors. On disclosure, the IASB received feedback that the information considered by the IASB would be better placed in management commentary rather than financial statement. So in October 2021, the board tentatively decided that it can require the information to be provided in the financial statement. However, we are considering whether it should require that information to be provided in the financial statement. So we are going to discuss further in the future board meetings. In particular, the IASB is considering feedback on some practical challenges related to providing the information, that the information might be commercially sensitive, forward-looking, difficult to audit, or difficult to provide by the preparer if the acquired business is included or integrated into our existing business. Our staff have developed examples of disclosures illustrating what information could be disclosed, applying the board preliminary views. The staff have been testing the example with preparers, users, auditors, and regulators to obtain more feedback on the practical challenges. And next is about amortization. The IASB is investigating two specific bits of feedback it had in amortization debate. First is whether it is possible to make a reasonable estimate of the useful life of goodwill. And second, whether there could be any consequences of transitioning to an amortization model, should the board decide to do so. Focusing on the first of those, not being able to reliably estimate the useful life of goodwill and the pattern in which it diminishes was central to the IASB's conclusion to adopt the impairment-only model in 2004 in the past. However, in response to the discussion paper, we had mixed feedback on whether it is feasible to estimate the useful life of goodwill. Although some respondents, including IAASB's comment letter, said that reasonable estimate cannot be made, but some disagreed and said a reasonable estimate can be made. Given the feedback, the IASB decided to investigate this topic further. The staff are doing additional research with stakeholders to understand how companies would estimate the life of goodwill and what information they would use, and whether these estimates could be considered reasonable. As part of this research, the staff have also been speaking to auditors to understand whether it is possible to audit management estimate of useful life and also auditability challenges. The staff expect to present the feedback from their additional work on both topics to the IASB in the probably first half of 2022, and then we will make further decisions after considering that feedback. With that, I will hand over to Mary to cover the second review of IFRS 4 SME standard.
Okay. Rika, thank you, and thank you for doing the heavy lifting on two of our biggest projects with the most moving pieces. I suggested including a quick update if we move to slide 26 on the update of the IFRS for SMEs, because I just wanted to highlight what is to me a very important decision that we made, on a tentative basis in the discussion paper, and then reaffirmed it has been the basis for our exposure draft. And that is what we call the alignment principle. I'm not going, I wasn't planning to go into details of exactly what we're proposing in the IFRS for SMEs, but the big decision for us, and we really kind of ducked it for the first review of the IFRS for SMEs because it was still being adopted for the first time, and we decided not to, to avoid rocking the boat in more technical, we use more technical terms, but that was our conclusion first time around. The big question for us was should the IFRS for SMEs, which remember is a standalone statement, a standard for entities that qualify and elect to use it, should that be updated because IFRS accounting standards are updated, or should the IFRS for SMEs be updated only when a reporting issue is identified from an SME perspective? And we proposed and affirmed that our basis was going to be alignment. And so therefore changes to IFRS accounting standards would be the starting point and the driver for generating an update to the IFRS for SMEs. Now that's a starting point rather than a self-imposed requirement. And if you've been following this project, you will see how we have looked on a topic by topic basis, both at the question of should we pursue alignment, and if we were, what changes we should be making both to the expression of the recognition and measurement requirements, and then also for the disclosures. I also wanted to highlight this project just for a minute here, because I want to distinguish it from the project I talked about previously, which is the subsidiaries without public accountability, where that I referred to as the slimmed down disclosure requirement for companies that wanted to keep using their group recognition and measurement requirements, that subsidiaries without public accountability draws on the work, but in some cases will actually front run the work that we do in terms of developing disclosure requirements for the IFRS for SME standards. So there is some interaction, but I want to highlight that they're separate projects. One aimed at, reducing disclosure, but keeping all of the recognition requirements. And the second is within the IFRS for SMEs standard while pursuing an alignment approach, to write a standalone standard, to maintain it as a standalone standard for entities within its scope. So that's all I wanted to highlight about the IFRS for SMEs. We were going to just maybe touch very briefly on a couple of other active projects. And while we had some ambitions to cover new requirements, maybe we'll hold off on those and see if there are questions or comments instead of trying to power through all those. On slide 28, you can see me reminding you about the post-implementation review of IFRS 9, our financial instrument standard. But I want to point out that this is the PIR starting for just one piece of the financial instrument standard. You'll remember this is a standard that we did in phases, and classification and measurement was the first piece that became effective. And so we're doing the PIR looking first at just the classification and measurement requirements. We haven't yet set a date about the PIR for the expected credit loss approach and the hedging section. And, as we do more PIRs, we get more insights into kind of how we pick what we think is the optimal time for doing them, including how much experience do people have, how much support was provided in the transition period. And you'll remember that for the impairment piece of IFRS 9, we had a transition working group, and also the availability of research, particularly academic research, looking at how users of financial statements are utilizing the changed information. We recently had, I think, a quite important discussion. It was, Rika, in the January board meeting about how we should prioritize findings from a PIR versus other agenda decision priorities. And instead of saying automatically the highest or automatically the lowest, we identified some criteria that we will use to filter out how we take PIR findings and stream them into our ongoing work plan. So those are the two things that I wanted to highlight about PIRs. And I was going to hand back to Rika for supplier finance, and then maybe Tom, we can stop after that and take either questions on the material we've covered, or see if people have specific questions about either our new requirements slide or any of the material in the appendix. That's okay?
Yeah, that sounds fine.
Thank you. Let's move on to slide 29. It's about the supplier financing arrangement. The starting point of this discussion was the fact that the IFRS interpretation committee received a submission about the supplier finance arrangement. In response to that submission, the committee published the agenda decision, and then the IAASB expected the agenda decision to help entities in providing relevant information about supplier financing arrangement when applying the current requirement in IFRS accounting standards. However, we were informed that with a targeted amendment to the current disclosure requirement, user of financial statement may not be able to obtain sufficient information about supplier financing arrangement. That triggered us to look into further to develop the amendment to IAS 7 and IFRS 7. And then, so now we are in the consultation period, and the exposure draft is out, and the comment period ends on 28th March 2022. So we are really interested in auditors' perspective on the disclosure proposal in this ED. Tom, can I?
Keep going if you'd like. I don't see any hands.
Okay, then I'll talk about one. I have to admit I snuck in, and it may be a bit of a repeat. Slide 31, which is the disclosure of accounting policies. And Bev, I'm giving you a shout out because whenever we do work like this, I think of you and the work you've done over the work that you've been involved in, going back almost 10 years now on improving disclosure. This is a narrow scope project, and the change in a bullet is to, in bullet form, is to change the requirement from one that says you must disclose your significant accounting policies to a requirement that you disclose material accounting policy information. And most people are focused on the change from significant to material. And that was the primary driver of the project. Why did we have a qualitative word that we didn't have specific guidance about how you assess significance versus material? But to me, an incredibly important complementary aspect of that is the fact that we changed it from an on-off switch about, is your accounting policy material, yes or no, to what information about your accounting policy. So it's not an all or nothing, it's not on-off. What information about your accounting policy is material to users of financial statements? And in doing this amendment, we included some additional information about how to assess the materiality of accounting policy information, as well as added some guidance to our materiality practice statement, which is practice statement 2. But I think it's really important as we look more broadly at the topic of materiality of disclosure, that we start picking up the thinking about information. It's not all of the requirements for disclosure of PP&E or none of them on-off switch. Yet again, I say personal view, but I think that this change that we've introduced here is really an important milestone in terms of saying, how do we think about pieces of information as the item that's being assessed for materiality? So I'll get off my soapbox now, and maybe Rika, was it you or me who's going to cover taxonomy?
Taxonomy, yes. Just cover the slide 35. So about our digital reporting strategy, we continue maintaining the IFRS taxonomy to facilitate communication between management and users digitally. But IFRS taxonomy is not a separate, isolated component for our digital constellation. In the board deliberation, as well as IASB's activity, we assess how the proposed requirement in presentation and disclosures affect digitally, not only in IFRS taxonomy, but also by using other ways of digital consumption of financial information. So to maintain consistent application of presentation and disclosure requirement in IFRS accounting standards, it's very critical for us to consider how the information is consumed digitally, regardless of whether the IFRS taxonomy is used. So given rapid expansion and evolution of digital ecosystem, our stakeholders' feedback to request for information of agenda consolidation requested us to slightly increase the level of our focus on digital reporting areas. So in response, we are going to discuss about whether and how we can support the market stakeholders' consumption of digital financial information, working together with the market stakeholders, including IAASB. And we also need to consider how we can work together with IAASB's work in this area. Thank you.
And Tom, I think that brings us just up to the end of our time. So maybe we'll be glad that we snuck topic-specific educational materials in earlier, although apologies to Henry, who had some prepared remarks, and just see if there's anything final from your side and let people go on time.
Thank you. Anyone from the IAASB like to react to the presentation, or ask any questions or raise observations? I think maybe because we're at time, maybe people are more silent. It was also very thorough and very helpful for us to receive that. And there's a number of items as we hear that we could either learn from each other's experience. I heard a lot of your talk about what you could take up on your work plan, very similar to our discussion about 2 months ago on ours as well, about setting expectations. A number of your issues around SNEs are issues we're confronting in our LCE standard. Clearly, the material accounting policy information is of great interest to us as well. And so appreciate the thoroughness of your presentation, Mary, Rika, and Henry. Would you like to say anything in close before I bring the meeting to a close?
Nope. Thank you. Apart from thanking you for your time and interest and willingness to make time for this update, and interesting to hear where you had questions and comments. And I leave you in Rika and Henry's capable hands.
Thank you very much for this opportunity today. I hope we can continue building a great relationship between the two organizations in the future as well.
Well, thank you, Rika. Thank you, Mary. Thank you, Henry. I should bring the meeting to close. I want to ask our PIOB observer, Michael Hafman, if he'd like to react to anything he's heard.
Just one comment or two. A very good session. I thought it was quite interesting and important to keep the contacts and make sure that each group knows what the other is doing. I was pleased to see the going concern issue showing up on the list of commonly suggested projects. I was a bit surprised that there wasn't more discussion of it in terms of what the plans are going forward, but certainly the PIOB would add its recommendation onto that of the IAASB that this topic gets a lot of attention from the IASB. It is one that's been a difficult issue to deal with over the years. And we think that not just the IAASB is in a position to solve it, but that others, such as the IASB, could very usefully contribute to progress in that area.
Thank you, Michael. And I think they're in early, as my understanding, based upon the presentation, is they're in early stages of assessing what comes next on for the work plan, that they just had gone through the analysis of comment letters. Is that correct, Mary and Rika? Yeah. Okay. Thank you. Okay, I want to bring this session to a close. Thank you all. Of course, our interactions with the IAASB and IFRS Foundation, IAASB, extend well beyond these formal updates, and we interact with them on a regular basis. So much appreciate that interaction, and we look forward to continuing with you over time. I want to thank the board and staff all for being here, for the prep for the session. Draft minutes for this meeting will be distributed for approval at our March meeting, and of course we'll get you the December minutes as well. We have a virtual IAASB CAG meeting for March 8th and 9th. The full details have been communicated to CAG members. The agenda and meeting materials will be posted on our website in due course. Just if you haven't remembered, you got a note recently, We have our quarterly board meeting scheduled for March 14th through 18th and the 23rd the following week. It will be a hybrid on that week of the 14th to 18th. Hopefully, many of you will be able to get to New York, but we understand there are still travel restrictions in place. The March 23rd meeting is fully virtual. The agenda for the meeting has been communicated, as said, and is now available on our website. So with that, I close our first meeting out for this year. I want to just again thank Mary for all your service to the world of external reporting and serving investor interest so well throughout your career. I'm sure there's a lot of work still to be done, but thank you, Mary, for that. And thank you for the IAASB for being such good partners and colleagues of ours. I'll speak to you everyone soon, and have a good rest of the day.
Thank you.
Bye-bye, everyone.
Bye.